Hey again, everybody. So this video, we're going to focus on the basics of candlesticks. So more often than not, when you see people trading, you're going to see them using candlestick charts. Now, there are other ways to view prices on a chart. You can change that here in TradingView up at the top bar here. So you can look at bars, which I don't personally like. I find them difficult to really see what's going on. You can look at a line chart, which again can sometimes be useful when you're looking at trend and structure. And I sometimes use a line chart to check support and resistance as well. But generally speaking, we use candle charts. Now, what the candle charts are often referred to as Japanese candlesticks. They were created in Japan. I believe when they were looking at rice prices. But anyway, that's by the by. And they're often called OHLC candles because the information that you get from each candlestick is the open price, the high price, the low price, and the close price. So if we look at this candle that we've got in the middle of the screen, the big green candle here, this is a bullish candle because the close price, which is indicated, let me find my arrow. This here is the close price. This is the open price. And then we've also got the high, which is where the wick stops. So this is our high. And this is the low, where the lower wick. So we've got open, close, high, and low. And on a bearish candle, it's simply at the opposite of that. So open at this level here, close, and then you've obviously got the high and the low as well. So that's how the candles are created. But what information can we get from these candles? Well, first thing I would say is that if we look at a candle like this is showing a huge amount of bullish momentum. So it opened here at 69,384. And you can actually, if you hover over a candle and then look at these numbers at the top, it'll give you the exact figures. So it opened at 69,396 and the low was 69,284. So it barely went down at all. So during this candle, and this is a daily chart, the price action was, dominant bullish. It was going up this whole day. It did go up to a high of 76,481, and then it closed at 75,637. And you'll often find that it's very rare to find the close at the high. And if you do find the close at the high, then it just indicates even more momentum, whether it's a bearish candle or a bullish candle. But often price will come back away from the high towards the end of the day. And then as we can see here on this next day, this is kind of looks a little bit like what you might call a doji candle, where you've got indecision, really, is what this is showing you. So it opened here, it went down, then it went up, but it came back to the close. So if I was going to look at this on a smaller time frame, so let's just look at that on a 5-minute chart. What we're seeing here is that price went down, it went up, and it came back down. So indecisive in comparison to the previous day, which is what we were looking at on the first green candle, which was pretty much all to the upside. So I think it's important to recognize that candles are specific to their time frame, and what's happening on a daily candle, you'll be able to get more information if you then go down to a lower time frame to see what the intraday movements were. Wicks are something that you want to be aware of, because what that's showing us is if we find this wick here, okay, this is a good example. So we had bearish momentum, a little bit of consolidation, bearish momentum, okay, and then it took out this low. So this was a significant swing low on the chart here, and we'll get into more of this later. But anyone that was long, that was bullish in this section here, probably had, longer term traders probably had their stop losses down here. And so what we're seeing here is market makers or institutional buyers selling down into the stop losses here to fill their buy orders. And then so we see this massive rejection, and what this is showing is rejection. So prices are, although this was a bearish lead up into this, and it often is the case, they rejected this level really with a lot of buying pressure and ended up closing above this line here, and that's significant. So these big long tails leave a footprint in the market and can often show us that a reversal is potentially on the cards. Again, you see another big wick up here on the upside, and then from there it fell down. And if you were to go through and have a look for all the long wicks, you'll often see that they happen at major market turning points. But you have to be careful with just trading purely off of candlestick formations. So this here is, if we zoom into this candle, this is probably what's known as a pin bar or a hammer. I can never remember whether one of them's bullish and one of them's bearish, but pin bar, hammer, what we're seeing is it opens, then price goes all the way down here, then it rejects and closes near where it opened. So once again, it's showing that the market is, giving you a telltale sign that there's strong buying pressure here, because the buyers managed to bring prices back up to almost to where the market opened, despite the bearish sentiment going into that. And so that can often be an indicator of bullish price action that's coming after. But you could go and have a look, and they don't always work out. So I think it's important, as we mentioned in the first drop-in session, you don't trade just purely off of price action or off of candlestick patterns, but they can be used in confluence with support and resistance, or other forms of analysis like divergence patterns on indicators, etc. So long wicks are something that are worth looking out for. Candles that close very near their low or their high on a bullish candle can show momentum, and most often that momentum will continue. You then have patterns which are engulfing. So an engulfing candle essentially engulfs the open, high, low, and close of the previous candle. So let's see if I can see one on the chart here. This one that we highlighted with a long wick is actually an engulfing candle as well, because it engulfs the entire price action of not only one but the two candles preceding it. So once again, an engulfing candle just shows that there is momentum in the move, and this isn't quite engulfing because it doesn't quite reach the same high as this previous green candle here. But I would pretty much call that engulfing as well, because you're engulfing that pretty much that whole candle there. And that's a good example there of a pin bar or hammer type candle that didn't work. So they don't always play out. You could have had a bullish bias because of this candle here, and then the market just sold down and down and down and down. And after one of these big momentum candles, it's often you will often see a day that follows where the price action is more contained. It's a little bit more accumulation or consolidation before the next big move, whether that continues in the direction of the momentum candle or whether it reverses. You've got inside candles, which is where the candles open, high, low, and close is contained within the open, high, low, and close, or the high and the low of the previous candle. And this is just showing us consolidation or indecision, and often we see large moves following an inside candle because people accumulate orders when the range is small, and then it breaks out into one direction or so. So that's a quick overview of candlesticks and how you can view them in the market. I tend to give more a daily candlestick that's showing a massive wick, or an engulfing candle or momentum candle. I'm going to give that more weight than a 5-minute candle that shows a big wick or engulfing. That's not to say that these don't work, but we're getting a lot more information in a daily candle than we are in a 5-minute candle. But time is fractal, and therefore you will inevitably see that on any big daily candle where there's a big long wick, that there's probably a little 1 minute or 5-minute candle at the top where there's a big long wick. It's just they're possibly not quite as reliable signals as what you're seeing on the daily chart, because a daily chart you're seeing all the price action and the information that's happened within a full trading day. Hope that was helpful. Any questions, as always, hit us up in the Telegram. We'll get back to you as soon as we can. Cheers.